You're in the Business Insurance Zone with me, Steve Savant, national financial columnist and money color commentator. This week on The Biz, our long-term care series, and on today's show, the long-term care insurance carriers with our special guest, nationally recognized long-term care expert, Stephen Foreman, all here on The Biz.
When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Well, welcome everyone to the Business Insurance Zone. Of course, I'm your host, Steve Savant, and we're broadcasting to a nationwide audience of financial advisors right here in Fountain Hills, Arizona, home of America's largest fountain. With me, day 4, authority on LTC, Steve Foreman. Hey,
Hello,
Steve.
How you doing today?
Well, hey, if you've never caught some of the articles, blogs, I don't know, do you tweet as all?
I do.
The tweet, I mean, Steve's all over the net. He is probably the most recognized long-term care authority, and today we're going to test his mercenary ways because we're going to talk about carriers. By the way, the inventory of players has so shrunk. There's not that many standalone LTC contracts out there. We're going to talk about brokerage. I want to give a little kudos. I know that there are good career shops, Northwestern, MassMutual, The Guardian, other carriers that have decent contracts. We think the contracts we look at are a little bit better. I don't want to get into it because we really haven't looked at them hard, and because they don't have access to brokerage. But the ones we do have, there are reasons why Steve likes them. And Steve is a niche player in this market. This is all he does 24/7. Steve, when we talk about the contracts, and a lot of our producers are right around the time where we need to start thinking about it. I bought mine last year. I went through a very, what I would call a regimented grid. Hope I made the right decision. I'll let you check it after the show. And I want you to talk about, there are certain reasons why you like carriers in certain circumstances. So it's not a one size fits all. You have to hear the prognosis from the client. What's the diagnostics in the client's actual story that's going to make you go one way or the other?
Right. Well, you know, I'd like to. I'm going to take you up on that. When we hear from a client, it's probably the same way in life. When a client calls in, we always say it begins with underwriting. Underwriting tends to steer you into one carrier or another. And you're right. We don't have access to some of the career contracts like a New York Life or Northwestern Mutual, but we do have, through some of the rating software that a lot of agents have access to, a StratDecision or Vital LTC, where we have transparency. And so we can show clients what is available. But we are generally able to show them some of the products that we prefer, and I'm going to review some of them that we think are generally a great value for the money this year.
Now, there are some big names on this list of yours,
Sure.
and I mean some names. And then there's one in here that I got to tell you, I must have missed my grid here because I didn't hear it. Let's go down some of the lists, and let's just hit some of the big ones right away.
Sure.
Genworth, I mean, that name is huge. It's got a monster moniker in the market.
Yes, it does.
Everybody hears about it. What's that Genworth contract like?
Well, the Genworth contract is extremely strong. It's always been strong in informal care. They now have a benefit called Live Well, which is extremely strong in immediate benefits. And Genworth actually is making waves this year for something that is burning up the blogs and the LinkedIn forums because they're trailblazing in terms of gender-based pricing. So we're not exactly sure what kind of impact that's going to have on the market, but it's getting a lot of play among agents, and that is, as we know, men and women can pay different rates when it comes to all kinds of insurance, but for long-term care, for 30 years, this has never been the case. So Genworth is coming out in April, and they're saying single men will pay one rate, single females will pay another rate, and couples will pay a blended rate. And so we've seen different things that say single females may pay as much as 20 to 40% more. Some couples may actually pay less than they're paying now. So this is going to have kind of a shakeup in the market, and we don't know whether or not Genworth will continue to have the kind of dominant market share that they have now, which some say is anywhere between 20 and 40% of the market, or whether there will be, or whether other carriers are kind of taking a wait and see approach and expecting to see some of that movement towards, will come to them. They're kind of waiting, and they're also taking a wait and see approach as to whether or not they will implement gender-based pricing.
Well, that could change the map. I mean, honestly,
will.
if there's any kind of success with this, and Genworth already owns a big piece of the pie. I mean,
Absolutely.
even if it's 20%, that's a high
Yes, they've been the top seller for probably about a decade running.
What about the Wild Kingdom, Mutual of Omaha.
Yeah, the Wild Kingdom has extremely high brand awareness, and they've been a terrific company to work with. When we first started with them, the product form wasn't that strong, I'll admit, so we had kind of a ramp up, and then they introduced their Mutual Care Plus and their Assured Solutions Gold, and now they're on their Cash First and so forth, and I believe they'll be introducing another product probably third quarter and beginning of their work site, I think, will change beginning of 2014, and it's an extremely strong product with cash alternative benefits and a terrific company to work with. So Mutual of Omaha has kind of moved in among the broker world. You're generally seeing brokers typically writing Genworth and Mutual of Omaha kind of a 1 and 2. And of course the rating is stellar. So they're a very strong carrier, and yeah.
Yeah, sometimes the marketplace kind of dictates. I mean, you sit in the Midwest, everybody knows the Wild Kingdom. Everybody knows Mutual of Omaha. They got a moniker that's just a killer. And when I look at that kind of marketing, and especially if things are close, sometimes it's better to go with the guy that's been front hunt. I know we're going to the break, but give me a little touch on MedAmerica. I'm sorry, that's a new one to me.
Yeah, no, MedAmerica, they're actually a subsidiary of one of the Blues in New York, but they are kind of in a unique position because they are one of these monoline companies that only does long-term care. And to me, that's kind of an advantage because it's not merely it's not something they do haphazardly. They have 25 years experience doing only long-term care. They also administer the long-term care block for, I think, something like 1,200 other companies. So they are a specialist, and they're a company that one of their strengths is they do the 100% cash product. So if that's something that your customers are interested in, that's the company you've got to work with.
We'll talk about that when we come back from the break, because the cash product, I think, is a hot issue.
It is.
We're going to review more of the long-term care insurance with our national columnist, Stephen Foreman. And don't forget to enroll in IULUniversity.com for the best training, education, and sales support when it comes to life insurance for retirement income.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.
Hello everyone, I'm Steve Savant, host of the daily internet talk show, The Business Insurance Zone. I've been using Backup Technician for over 20 years for my edutainment workshops, public seminars, and my ultimate resource for my consumer shows. Why? Because it's the best needs analysis and sales support material that addresses almost every financial planning scenario. And now you can test drive Backup Technician absolutely free for the next 30 days. Go to thebiz.tv and click on the BizBlog menu and sign up for the most powerful resource available to financial advisors. Well, welcome back to the Business Insurance Zone. I'm Steve Savant with Steve Foreman. And remember, you can order today's materials at thebiz.tv. And just a heads up before moving forward with any of the ideas you hear on our show, always consult your tax advisor and broker-dealer compliance department. Did you see how I did that housekeeping just to cover me? Even though we're not talking about either one. And we're talking about today, though, long-term care with long-term care expert and national columnist Steve Foreman. Steve, we talked about 3 carriers. At the very end, we were talking about MedAmerica, which to me, I'm sorry, I guess I don't float in this league, didn't know them. But you keep talking about this cash plan now.
Right.
You mentioned it twice. Talk a little bit about that before we talk about the other carriers.
Cash is something that's kind of unique. They always say cash is king because you can use it anywhere. But the other reason for carrying a company like MedAmerica is that some of the carriers have retrenched from offering multi-life, worksite, employer paid. MedAmerica is one of those companies that still offers a worksite program, and it's a strong one. And we're going to cover other carriers that do that. But the other thing is, too often agents find themselves in a situation where they're making an apples to apples comparison, and that can be different. And that goes back to the spreadsheeting argument, which I say live by spreadsheeting, die by spreadsheeting. Because if you're always trying to compete on price, someone's going to come in behind you and lowball you. So when you can offer something that's qualitatively different, like cash, then you're making an apples to oranges comparison. And I think that puts the agent in a competitive situation.
Well, when I think about these carriers that we've mentioned thus far, 2 of these 3 have huge marketing moniker presence.
Yes, they do.
No doubt about it. But there's nothing wrong. When we talk about John Hancock, they've been around forever.
Yes.
And they have been, in the past, a major player. Now, are they going to stay in this or not? I mean, Steve, there's this debate. They when they want to be a player in something, they can assert their long-standing presence in the market.
They can. Now, John Hancock, they did something bold. They were in a position where they said, you know what, we've just implemented the results of this, they said one of the largest morbidity studies ever conducted, and they made some changes. And then they said, we have the ability to design a new product and be revolutionary. And I was in those product development meetings, and they had a lot of terrific ideas. And then I believe that they may have run up against some pushback from the states, and they came out with this slightly different product called Benefit Builder. And I think, again, spreadsheeting. This is the idea that if agents can't easily spreadsheet it on a Stratecision or Vital LTC, they just say, if I can't put it up against the others, I can't sell it, I can't present it. And Benefit Builder, unfortunately, may be a victim of distribution that says, I can't wrap my head around it. It's a terrific idea. It's a great product. It's a design that basically the company can't lose money on it, and they're to be commended for their boldness, but it may be something that the agents are slow to buy in. Now Hancock, because they have such a large career distribution by JHFN, is still going to be able to sell a certain amount every year. Now whether or not Manulife in the home office in Canada, how long they're going to give them free rein to keep doing this and develop another product is anyone's guess. But I do know they're a believer in long-term care, they're a believer in the demographic, they know that government cannot alone solve the need. So I do believe that they will be around and will attempt to bring out other products.
And again, a huge name, everybody knows who they are.
Absolutely
So
strong
they're a
claims
player.
payer, brilliant to work with, so we like them.
And we'll talk about this, about the spreadsheeting issue, because I know that this is, I've read your blog on this. I mean, it's just huge. And I think we really we're conditioned to hit an Excel spreadsheet,
Yes.
look at these numbers, and not look at value issues.
No.
There's no itemization of how to do that. So that's why I say this is a niche market. You need to play with players like Steve who know LTC ice cold, so you can understand what you're selling your client and what is the value per premium dollar. Because that to me is a huge, huge issue.
Yes. Do we have time to
We do.
cover a couple other
Well, I want to
carriers?
talk about Transamerica
Sure.
for sure, because Trans is a player. They're kind of making a big comeback in a lot of
Yes,
areas.
they
This
are.
is a big one right here, long-term care.
Yes, they are committed to long-term care. In fact, they're in the latter days of introducing a new product series. In fact, just announced in California recently, TransCare 2, and now they're upgrading to TransCare 2 2002. Now, Transamerica is an example of a carrier that says, just like you said, we do not want to compete on price. That's not how we're going to win this game. We're going to compete on brand, on value, on the strength of our product, on the strength of service. So they say, we don't want to be the low price leader. That's not how we're going to win this game. And there's a couple of carriers that take that say that, but Transamerica really stands behind it. And like you say, everybody knows the logo from the San Francisco building, and so I do appreciate their commitment. We've had some very good conversations with them. And this also points out, you ask carriers when you have your conversations with them, you do, I do, where do you want to be? It's a curious thing. I'm not going to say that Transamerica is in this bag, but it makes me think. Very, very few carriers say they want to be number one. Carriers may want to be number two, number three. In long-term care, because of the high acquisition costs, because of the perceived risk, because of the certain amount of margin they want to make, very few carriers want to grow very quickly. So when I mentioned that, carriers are afraid that maybe there's going to be some reflected glory off of the changes that Genworth is making, I think there's a lot of carriers, the other carriers, are very afraid of taking on too much of that reflected business too quickly. So everybody, I think in April, we're going to see some very, hesitant carriers waiting to see where they fall.
Well, do you think by the time we hit the fall campaign that all these carriers will have reconfigured their product line?
Yes, I think in October it's going to be a very different market than it is today.
Well, by the time we get to November, of course, we'll be tweeting, blogging our brains out on long-term care, because in November it's long-term care month. By then, hopefully we'll have Steve back on just before we hit November, because it's a great time, because everybody's thinking about it and talking about it. Listen, remember, you can watch our show and all the shows we do by going out to our website, thebiz.tv, and hitting our red on-demand button. That's the buzz for the biz for the day. Get in the zone, the business insurance zone.
You're listening to the insurance industry's #1 resource for products, planning ideas, carrier information, and interviews you can use. When it comes to life insurance, annuities, long-term care, disability, or group pension plans, we're the news you can use.